Does it seem like every stock in the stock market is currently exploding to the upside, but your portfolio is left behind? The S&P 500 and Dow Jones are still at all-time highs. The Nasdaq exploded up today for a second day in a row, but your portfolio is going nowhere really fast. Are you still scratching your head and wondering why you're still losing money or why your portfolio is not going higher? We're going to go over some price targets and market conditions to see what's going on in the SPAC sector. We also have the Federal Reserve addressing economic and interest rate expectations on Wednesday, April 7th. This is the latest short-term catalyst to be aware of. If you're invested into SPACs or high-growth stocks, you don't want to miss this. If you enjoyed this video, make sure to like, subscribe, and hit the bell to get notified for my latest videos. If you want to get 2 free stocks, try Webull. Get 2 free stocks when you deposit $100 or more. To get the most up-to-date high-growth stock news, my latest buy and sell alerts, and smart money market sentiment, check out my Patreon. It comes with private Discord and a full range of server benefits. All the links will be below under the description of this video. Let's start off with the 10-year bond, which is the leading inflation indicator. At the time of this recording, we have the 10-year bond at a steady 1.71%. The longer we hold these bond levels, the more likely we go higher. If bonds go higher, that signals higher inflation, which equivalates to a drop across the stock market. The turning point for the stock market is when and if the 10-year bond hits 2%. The Fed could come under fire for easy policy while the economy soars and inflation rises. These are some key points to take away from this article. The Fed will have a tough time promising easy policy as markets watch increasingly strong economic data over the next couple of months. The second quarter is expected to boom, and the Fed could look behind the curve while it keeps its commitment to zero rates and bond purchases in the 3-month period. Bond investors now see the first Fed funds rate hike in December 2022, while the Fed consensus is that there will be no rate hike through the end of 2023. This article goes into detail with the projected economic data for the second quarter of 2021. It all points to a fast-growing, thriving American expansion, which is good, but with that being said, inflation will rise and so will the bonds. The Federal Reserve is in a tough spot in which they have created with easy monetary policies favoring the wealthy. They are vocal about not raising interest rates until 2023, but if the economy forces their hand through a surge of immediate inflation, they will have to raise interest rates overnight. If inflation rises without the Federal Reserve stepping in with higher interest rates, we will see a world of high-priced daily necessities like the gas needed to drive your car and the food at your local grocery store, making living conditions for most people impossible. The moment they raise interest rates to fight inflation is the moment we will see an immediate stock market decline. Wednesday's meeting will be very important to see Jerome Powell's language towards inflation and interest rates. A shift in tone can also trigger a market sell-off. This is important information to keep in mind overall to paint a bigger market picture. Now let's get into some numbers as to why the markets are exploding to the upside, but your portfolio is not. The Nasdaq hit a high of around 14,100 on February 12th and is lagging behind in comparison to the rest of the major indexes. It's currently at 13,700, that's 300 points away from all-time highs. The Nasdaq is up 5% in the past week. For most of tech investors, this is the index to follow. Let's take a look at the S&P 500. The S&P 500 is performing very well here with a steady uptrend in the past 6 months and is currently at all-time highs at around 4,100. The Dow Jones is another current outperformer at all-time highs. It's also at a nice bullish uptrend here for the past 6 months and is currently trading at all-time highs around 33,500. Since most of us are trading into high-growth SPACs, I am now looking at the SPAC ETF ticker symbol SPCX. I was previously watching the Nasdaq for overall guidance with my SPAC investments, but I was wrong. If you're investing into SPACs, this is one ETF you must follow to get an overall idea of what the SPAC sector is doing. On February 16th, it hit a high of around $32 and it is currently trading down at $28.75. And the last instrument to watch here for market perspective is the Vix, the Volatility Index. This index tracks market volatility, which in short means the higher the number, the lower the markets go. Overall, we see it cooling off here in the past 6 months. It hit a high of 40 on October 28th and is currently trading at around 18. Just a rule of thumb, in general, during normal market conditions, the VIX likes to be around $10, which means we are still far away from normal. Now that we have an overall picture of bonds, interest rates, and market indexes, let's layer SPACs, the Nasdaq, S&P 500, and the Dow Jones on one chart to see what's going on. Do note different timeframes will give you different results. This analysis is based on the past 6 months. SPACs are represented in blue, Nasdaq is yellow, S&P 500 is teal, and the Dow Jones is orange. What we see is, since the inception of the SPAC ETF here in December, the SPAC ETF was a lagging performer. It had a nice strong bull rally all the way until January with a pullback and a second run-up in February, outperforming the entire market. SPACs were hot. The gains seem endless. Now we see a massive pullback and is left behind underperforming. What we can tell based on this performance, SPACs are high beta stocks, which means for each 1% positive or negative move in the overall market, SPACs move twice or 3 times as much, making them highly volatile. Great for gains, but hard to stomach during downturns. According to this chart, if you believe in SPACs, this is the time to go in and start buying up your favorite SPACs. The Nasdaq, S&P 500, and Dow Jones are all outperforming, and the opportunity is currently in SPACs. The best time to have bought those indexes was early March. Now is the time to buy SPACs. On a side note, the Nasdaq surprised me once I put up this chart together. Although the Nasdaq is behind in comparison to the S&P 500 and the Dow Jones at all-time highs, the Nasdaq is still slightly ahead of all indexes in the past 6 months. I hope this video brought some clarity. We are being challenged and we need to have some patience. These big moves take months to develop. For now, it's time to eat up as much as we can, hibernate, and wait for the SPAC storm to be over. Do consider that performances of all these indexes are at the helm of inflation, interest rates, and the Federal Reserve.